Hey everyone, welcome back to the channel. Today we're diving into my selected top performing ETFs of 2024. Whether you're an experienced investor or just starting out, knowing which funds are leading the market can help you make smarter financial decisions for 2025. So stick around to find out which ETFs made the biggest moves last year and see if you have these ETFs or if you're considering adding them to your portfolio. Before we begin, let's answer the simple question though. One is, what is an ETF? For those new to investing, ETFs, or exchange traded funds, are investment funds traded on stock exchanges, much like stocks. It is like a basket of investments, such as stocks, bonds, or other assets that you can buy and sell on the stock market, just like a regular stock. It lets you invest in a variety of companies or sectors at once, helping to spread out your risk. Think of it like buying a sampler box instead of picking just one item off a menu. Now let's break down the standout ETFs of 2024 and what made them soar last year. Starting from number 5 to number 1. Let's go. Kicking things off at number 5, then we have Vanguard Growth ETF, or VOOG, which delivered an impressive 32.03% return. Its portfolio is packed with high-performing tech and growth stocks, making it a big winner this year. VOOG invests in large, well-established companies that are expected to grow at an above-average rate compared to the market. As of now, VOOG's top holdings include household names like Apple, Microsoft, Amazon, and Alphabet. These stocks make up a significant portion of the ETF, contributing to its growth potential. These companies have been leaders in their industries, and by investing in VOOG, you're essentially betting on the continued success of these tech-driven giants. VOOG currently has an excellent expense ratio of 0.04%, making it an attractive fund, though it will cost you about $408 per share, but has over $150 billion invested in this fund, meaning a lot of folks have their money in this fund. At number 4, we have the Vanguard S&P 500 Growth ETF, which did a return of 35.69%. Its focus on growth-oriented companies paid off big time as market sentiment favored innovation and expansion. This ETF tracks the S&P 500 Growth Index. So, what does that mean for you as an investor? Simply put, it gives you exposure to some of the largest US companies with the highest growth potential. Some of the biggest names in tech, like Apple, Microsoft, Amazon, and Nvidia, make up the bulk of this ETF. These companies are expected to grow at an above-average rate compared to the rest of the stock market. Now, one of the great things about VOOG is its low expense ratio, just 0.10%. That means you won't be losing much to fees, so more of your money stays invested in an ETF that is focused on growth. It also has over $15 billion invested in the fund and sits around $365 per share. Coming in at number 3, momentum investing stayed hot this year, with the iShares MSCI USA Momentum Factor ETF posting an almost 33% return, outpacing the S&P 500 by a wide margin. MTUM picks up US stocks that have had strong price momentum. Basically, it invests in companies that are trending upward and showing strong relative performance. Some of its top holdings include well-known companies, all of which have been on a strong upward trajectory. Momentum investing has historically worked well in bullish markets, but keep in mind, this strategy tends to favor stocks that are already performing well, so it can be riskier when market conditions change. MTUM has a 0.15% expense ratio, which is relatively low for a factor-based ETF. This makes it a cost-effective way to tap into the momentum strategy without breaking the bank on fees. Currently has over $13 billion invested in this fund and sits around $208 per share. Coming in at number 2 is the Invesco S&P 500 Momentum ETF. With a 38.83% return, this fund capitalized on stocks with strong momentum, meaning it looks at past performance to identify which companies are likely to keep trending upwards. The idea is to ride that wave and benefit from the continued growth. The expense ratio for SPMO is 0.13%, which is fairly reasonable considering it's a momentum-based ETF. So, who should consider investing in SPMO? If you're looking for exposure to momentum stocks, companies that are on a hot streak, this ETF could be a good fit. In addition, it is extremely well priced at around $95 per share and just over $4 billion in the fund. And finally, at number 1. If you've been following the tech world, you won't be surprised by this one. The VanEck Semiconductor ETF returned 40.36%, riding the wave of demand for semiconductor technology. SMH gives investors exposure to some of the biggest and most innovative semiconductor companies on the planet and who are on the end of monster returns for the past 2 years. It's a focused fund for anyone betting on the future of chip technology. SMH is an ETF that gives you exposure to the top 25 publicly listed semiconductor companies in the US. Some of its biggest holdings include industry giants like Nvidia, ASML, Taiwan Semiconductor, and Broadcom, companies that are at the forefront of the technology powering everything from smartphones to self-driving cars. The semiconductor sector has been one of the fastest growing industries, especially with the rise of AI, 5G, and cloud computing. SMH offers an easy way to tap into this growth without needing to pick individual stocks. One of the key things to know about SMH is its expense ratio. It's 0.35%, which is fairly typical for a sector-focused ETF. It's not the cheapest, coming at around $247 per share, but it provides specialized exposure to a booming industry and has over $24 billion invested in this fund. There you have it, the top 5 ETFs of 2024, in my opinion. These ETFs dominated in 2024 by focusing on tech, growth, and momentum strategies. As always, past performance isn't a guarantee of future success. However, if you believe history is a good indicator of future returns, then you may want to add these to your list for 2025, or if you already have them, you may want to double down or hold them. Again, always do your own research and consider speaking with a financial advisor before making investment decisions, as I am not a financial advisor. If you found this video helpful, don't forget to hit that like button and subscribe for more market insights and investing tips on the ticker symbol. See you next time.